Now, to the conversation that we really wanted to do today, and that's the holding companies. Now, just look at what's happened to some of the stocks in the session today. They've all gone up in trade, almost without exception. You can see any holding company, you pick up, close your eyes, throw a dart at that list, and that stock would do well. So let's just pull up some of those names. Be it Kalyani Investments, Bombay Burma up 19%, Vardhman up 20%. There are, by the way, there's a lot of names, some of which are not even known. For example, Harsh, there's a stock which has SRF as one of the holdings, right? The name being
Kama Holdings.
Kama Holdings. So Kama Holdings is up in trade. There is Rajpalam, which is up in trade. JSW Holdings, Ramco Industries.
The only exception, in fact, Neeraj, sorry for interjecting, is EID Parry. Because that's a play on Coromandel.
Precisely. And it's also got a business of its own.
Correct.
In some sense, it's not strictly a holding company, but it has a holding company features, yes. So the point, viewers, that we're trying to draw out here is that one, these companies are doing well because SEBI, actually, let's get Deven in on this and they will kind of talk about this ourselves as well. But Deven, what did you make of this SEBI thought process, if you will? I won't call it a decision as yet. And what it could mean for some of these stocks?
So Neeraj, as I see it, I think there are two dimensions to this particular thought process of SEBI. On one side, I think many of these holding companies per se, which are unknown in the market, I think they are sitting on an underlying equity, which is held in their portfolio, which is at a significantly large amount of value. And should these holding companies also want to be part of the listed market, in some cases they are, but I think should they want to be part of the listed market, then in such case, I think there is a case for giving them a proper price discovery and its mechanism. That is where I think the role of the SEBI is that currently in the given situation, without naming any particular company or a promoter group's company, I would say that I think if they have to become part of the market framework, then in that case, I think they will not be able to get listed only, or if at all they are listed, I think they will not be able to correct themselves on the pricing front because there would be a circuit mechanism which would be applied. So here, I think the proposal is coming forward that I think through a call option route, I think you discover the price and establish that particular price. So that will probably be, I think, effective way of handling it. Now, the second part of this particular argument is whether this particular price which is discovered is not discovered until now. Answer is that I think it is already known to people because listed market companies are already traded. And I think based on their percentage holding in the holding companies, you can easily establish this particular price. So people are knowing the value. What is not very clear, and I think that is what I think the argument should be, that why there is a discount of such a significant amount of value between the holding company and the operating company's the valuation. To me, the understanding is very clear. When you look at the global markets players, where the holding company discount stays between 15 to 20% on an average, in India, I think that discount stays anywhere between 35% to 75% kind of average. The very reason for it is that I think Indian promoters, basically, they don't use holding company for any kind of monetization purpose. They use holding company, as the name says, for the holding purpose. So for an investor, this particular thing doesn't mean anything because when the promoter is not going to take any action in the holding company, whether buy or sell the stock, maybe at some time or a time buy the stocks of the market, but not sell it, then how would an investor of holding company make money out of, minority investor make money out of this particular game is not clear. And that is the reason for which I think this discount prevails. At the same time, whatever the dividend receipt or the corporate benefits that the holding company receives from the operating company's distribution of dividend, etc., their allocation policy is not at all clear to the minority shareholders because most of the time promoters have not declared the allocation policy of the capital for that purpose. And that is the reason for which I think this discount prevails. So even if SEBI addresses one part, which we talked about, whether the second part also gets addressed, I think is something which remains to be seen. To me, the sustainability is more important on this price discovery. And should that happen, then probably I think it would be a more meaningful outcome of the policy regime that they are talking.
Okay, and before I come to Hemen on some of these stocks as well, just one follow-up here, Deven. There are some stocks wherein the value of the holdings is at a substantial premium to the listed price. And, you know, the price doesn't go up because the price of a stock can only go up as much before which either the additional surveillance measures or some of the other stuff naturally would come about, right? Because it's a technical process of sorts. And therefore, is this price discovery mechanism that SEBI has introduced a good way of getting some of the really undervalued names, not the ones which trade at a standard 50-60% discount, but the ones which are trading even lower? Could there be a method that some of those may come to some bit of parity? And is that one of the reasons why these stocks are excited? Part one of my question is that. Part two, in the past, Deven, we've seen multiple instances of 4 or 5 days of a flurry of activity in holding companies before they die down. And our producer will fire those instances as well. Could this be more of the same based on your answer?
Well, I guess I think anybody's guess on that front, at least on the later part of the question. But I think the first part of the question, say for example, we take name at this point of time just to explain the case, say Rajapalaya Mills, which is basically holding Ramco group of companies. Now, if that is a holding company and if there is discount into that part of it, it is for a reason. Rajapalaya Mills in itself, I think, would have a very low floating stock in the market. So either I think the premium or a discount, I think will depend on the floating stock of that particular company. Suppose with a low floating stock, and if somebody has, I think, created a premium position for Rajapalaya Mills because of the underlying assets are likely to move up, then in such case, I think where would they go and sell it to? Because liquidity itself, I think, is a question mark. And other way around argument equally true, that I think if your liquidity is so poor in the counter, then where exactly I think the investor will find those stocks. So I think probably this price discovery mechanism, even though it gets established, which I say in my first argument, even though it gets established, I think there is a good chance that I think the sustainability of this particular price, which is discovered, is questioned because of the low liquidity of the holding company in the marketplace. And I think that would be an interesting proposition. In fact, I think there is a larger question to entire subject as far as the listed companies are concerned in the marketplace. How do you increase the float in the market so that this unreasonable premium, which is right now happening because of the significant amount of liquidity chasing the stocks, I think, which are largely cornered by the promoters. So how would you probably create the liquidity factor into the market so that I think this undue premium or the valuation probably gets addressed? That should be the question going forward. I think we all are waiting for some kind of a mechanism to take place on this front so that I think the significantly large amount of P, 30, 40, 50, 100 kind of Ps, I think they could possibly come to some kind of a rational level eventually, I think, due to this particular factor of lower liquidity.
Well, it's a super interesting conversation. Thanks so much, Hemen bhai. Lots of factors highlighted as part of this conversation on the possibility as to why some of these stocks trade at maybe 50 to even sometimes as high as 70 and 80% discount to the underlying stocks and companies that they hold. Let me switch it over. Hemen, talk to us about how you're viewing the developments here from a technical standpoint, especially the way the stocks have moved up, some of these holding companies, and what should you do from a trader perspective?
I think if I was a trader, Harsh, I think somewhere it's in the price. If you look at Tilani Holdings, you look at quite a few stocks that you were discussing, Bombay Burma, it's almost at 20%. I mean, I think every stock worth its salt is, except maybe Tata has all moved 10% and more. So the trading cream, I believe, is gone. But if you are looking at it from a slightly longer term point of view, yes, I think something like a Bajaj holding has been in a very linear uptrend for the last 5 years and counting, 4 or 5 years. Something like that would make interesting. But once again, I'm not sure if it makes sense to recommend a trading buy. Yes, longer term point of view, as an investment buy in, I wouldn't say go the whole hog, maybe in an installment system, look for value. I think then some of these stocks would stand out. But the way they've run up, you can't compare fertilizer and holding companies. But if a stock moves 20%, how much more and when? So I'd say take it easy. You're looking for value, looking for investment, wait for a cool off, and then you can sort of start nibbling.
Okay, take it easy. That's what Hemen seems to be suggesting. But we are going to slip into a very short break.